All right, good morning, everybody. Today is Tuesday, November 11th, and we have about 6 minutes till market open. So let's, excuse me, go ahead and create our areas of structure. So we had a bearish structure here yesterday. The next one is all the way up here at the intersection of those two candles. For bearish structure, and this is on the hourly time frame, I really don't see anything until down here. So structure-wise, we really don't have anything. Uh, for the market open, intraday market open will be for a buy. Yesterday, it was for a buy. Price came, pushed up nicely, almost got to TP, but reversed, took the trade out in stop loss, and then pushed back all the way up. So let's see if today we'll have a push up, because I know I think we are very likely to push up here because we are breaking past a bearish structure. So price can easily reverse, but also if price does break, we'll have a lot of liquidity to push price all the way up. The previous day we had a win. The previous day we had a stop loss, and then price pushed back up into profit. Previous day we had a win of 1:2. So these entries, they're pretty overall. Compounding wise, they are pretty good entries. We also have our scalps. So we have the regular market open scalps. So each of these scalps, we're going for a 1:3 for this one, and this one. For the bottom right one, we are going for multiple entries in a day. So let's see how things will go here. So the market open scalp. So the only scalp that's actually the only 9:30 a.m. scalp that's guaranteed every day is the market open scalp. And if we look at the journal, the trading journal for the market open scalp, you can see so far in how many weeks? In less than 4 weeks, it's netted about $30,000, going for a 1:3. So 20 points stop loss, 60 points TP, risking like 1%, but I normally say probably risk like 0.5. So you can see the statistics for the market open scalp. Pretty nice. So we'll go back up here and wait for the market open and see if today, this intraday, can hit. So we have about 2 minutes till market open. And again, for me, all these scalps are automated. So we'll just have to wait and see. All right. So we have about a minute and a half. All And then just one more minute. All right. Market opens in 40 seconds. Actually, 20 seconds or 10 seconds now. All right, and there we go. Market is opening. And then we wait for the scalp. 3, 2, 1. There goes the entry, and let's see how this will go. There goes the push. Very nice. All right. And here, of course, this is a buy, so this is pushing. There goes that push that we wanted. Let's see if we can get to full TP on this one. So today we didn't get a 9:30 a.m. impulse entry. For the multiple crosses, we haven't gotten any yet. For this crosses scalp, I normally just take the first entry that comes after 9:30 a.m. So today we don't have any just as of yet. Then for our SAR and EMA entries, so far nothing. Let's see. Hopefully we don't get tagged out of this one. I'm still in it. Yeah, unfortunately, this one, the market open scalp, got taken out at stop loss. We came pretty close to TP, but anyway, price decided to reverse back down. So right now the focus is on, so we still have the main one here. So we'll see how the main one goes. We didn't have this one at the bottom left. So for right now, we'll just focus on the top one, the upper right one, and the bottom right one. So for the upper right one, I'm only looking for the first impulse entry, or I'm sorry, for the first crosses entry. And then for the bottom one, we are taking each and every entry that comes up. Right. For the SAR and EMAs, I really don't see much here. Right. So the first, let's see. The first crosses entry looks like it will be for a buy here. All right. So I'm automatically in that trade. And also mm, for the multiple crosses entry as well. Let's see. So for this one here on the bottom left, we either wait for a 60 point TP or you wait for the exit signal candle. So I have two separate entries or two separate accounts. So one waits for the 60 point take profit and the other one waits for the exit signal candle. So the exit signal candles are these ones that have the red triangles. But the top one, the one on the upper right here, is just like a typical 1:3. So 20 points stop loss and 60 points TP. All right, so there goes, looks like that's the exit candle. If that closes as a bearish candle, All right, so this is the exit candle for this one. So you can see the exit candle saved us some drawdown there. Right, we might get another entry. So this other one is still running. We have quite a bit of resistance here. I don't know if hopefully price ends up breaking past this highs, but we have all these wicks here are telling a story of heavy selling pressure here. So if any buying is supposed to happen, they'll have to come down and pick up liquidity from somewhere first. And the question is where that will be. Um, I don't know why this isn't working. All right. I don't think this position up here will survive, unfortunately. Because we have, if buyers are supposed to push price back up, I'm thinking they have to come back up or come back down and pick up liquidity from somewhere. Uh, and question is where. But yeah, so for that position, this one again came so close to TP, same as the market open, but reversed back down and closed at a loss. So done with the upper left, the upper right, and bottom left trades. So the only trades we're left with is to take these multiple crosses. So the first one ended at around break even. The second one ended at about 20 points or 10 point stop loss. And then let's see. Looks like we're about to get a sell entry here. And I'm not sure why it's not picking on my trades. Um, uh, 43. Give me a second. Something's up with my accounts. It's not copying. V3. So this cell is still running. So for the multiple crosses, two losses, one break even. So price is ranging, and anytime price is ranging, that's definitely not the best for any of my 954 for any of my strategies. But let's see how this goes. So this market open is still running. The 100 point stop loss and 200 points TP. That one is still running, but we need buyers to pick up liquidity from somewhere. Okay, my trades are copying now. Um, all right, that's better. Um, so let's see how this goes. Mm, multiple crosses. All right, so we're back running on this intraday market open. Let's see if buyers can keep pushing price up. This one is already done. So the one we're focusing on is this one on the bottom right here. All right, if price comes back down like that, we might get if price is supposed to go back up, we might get another cross buy here. And the only one we are taking multiple crosses is this one on the bottom right. So these multiple crosses have been pretty consistent so far. The multiple crosses ones have been pretty consistent so far. I think I started journaling them last week. So you can see last week there was only one losing day. So last week had like, and this is risking like uh or using a lot size such that for every 10 points and on a 200K account, for every 10 points you lose or gain $250. And that one you're of course waiting either for the exit signal, which is this red triangles, or you can go for like a 60-point TP and start trailing. But you can see the whole of last week pretty consistent, other than one losing day. And then yesterday was a winning day. Today, so far, is a losing day. I think today I'm down about $800. But of course, for this one, you take every single entry between 9:30 a.m. and um 11 a.m. I'm done with the one trade a day entries. So the one trade a day entries is this one, the market open scalp, which today came so close to TP but came back down. Personally, I don't set break even or take partials, but this one had achieved a 1:2. For me, I go for a 1:3. And if you look at the stats for this market open scalp, you have going for a 1:3, risking about 1% or 0.75%. But for me, I'm doing 1%. You can see in 4 weeks, that's about 30K because I started journaling this on 23rd of October. And you can see the last week of October was about 15K. Um, so this is one of the only entries that you're guaranteed a trade exactly at 9:30 a.m. So the market open is similar to this intraday market open entry. So you just enter your scalp the same direction as this intraday trade, and then you go for a 1:3. And then you risk, I recommend maybe 0.5% or 0.75%. But personally, I'm doing about 1%ish, but I do recommend like 0.5%. So we still have heavy selling pressure here. I'm hoping we can break past this long wicks that we created up here, but looks like buyers are having trouble breaking past that. And the same thing that happened yesterday may happen today where we come so close to TP here and then push back down and then pick up liquidity from somewhere and then push all the way back up. But hopefully this doesn't happen with this trade today. All right, if we keep pushing down, the next trade here will be for a sell. The next crosses entry here might be for a sell. And again, for me, I've automated this. Yeah, and there it goes. Uh, and the beauty about this crosses, like you can ride it until you get the opposite signal. Typically, you're waiting for the opposite signal, and sometimes you'll get the opposite signal even after 100 points or even 150 points. So let's see if this one will drop or if it will just keep going back and forth. The only issue we have here that I can see is that we can already tell there's a big back and forth between buyers and sellers. So you can have a lot of ranging and consolidation, and that is definitely not good for any of these scalps. So we'll see how this goes. For this multiple crosses, you just need one nice big move to ride, and you can ride price that way. So for this one, of course, you have an open stop loss, and then you wait for the exit candle. So the candles are the ones that, so you can see possibly this candle right here might be the exit candle if it closes with that red triangle, which it seems like it will. Yeah. So it closed with the red triangle. So again, right, we're in this consolidation as much as with this bottom right chart, I've filtered out the signals that come when markets are ranging. You still get some signals that come during ranging markets, but you still keep taking every single trade, and then you will get eventually that one trade that's going to push up for like 60 points or for like 100 points. But the goal is to not risk too much or not to use such a big lot size because, for example, you can see here the first trade for today was about break even. And then the next three trades were losing trades. So you can see right now we have a possible buy signal. But this buy signal again can push back down if we are in that ranging market. So for me personally, for today, I'm down about 1700 for this particular one. For this particular multiple crosses entry. And again, I just keep pushing. So 1700 on a 200K account, that's about 0.7, what is that? About 0.75%. So eventually price will break up either sell side or buy side, because if you see a sell print and then a buy printing, that just means we're in a consolidating market and you're having both buyers and sellers being trapped at both ends. But for this particular one, for the multiple crosses, you just wait for the exit candle. That will be typically the exit candle won't be like 60 points, and then unless you have a big spike up against you. But typically, you see, like for this one here, the exit candle came about 30 points away from the entry. So if you are risking or if you're using a lot size such that for every 10 points you're losing or gaining $250, which is what I'm doing, like for me, this one I only lost 750 bucks. And then now you wait for that breakout in whatever move. So you can see the difference between the upper right and the bottom right charts is that the upper right chart has multiple signals, right? So what I did, the upper right and bottom right charts are using literally the same instrument to enter trades. The only difference is that the bottom right chart, I have filtered based off of consolidation. So anytime price is consolidating, you're having those signals filter out. But you can see still, like this past two signals, you're just having a push up in the market and then push down. So you can see you're having a sell here and then a buy and then a sell here. So that literally tells you, even if you go to higher time frames, like if you go to this chart that we are in this intraday entry, you can see these candles. You have a bullish candle, then a bearish candle, then a bullish candle. So definitely for this multiple crosses entry, use a small lot size because eventually you will catch that 10-point move or 60-point move or 80-point move. But you just want to survive long enough to catch it. Let's see if we'll have this breakout to the upside here, or we'll just be in another back and forth ranging. Right, so let's see if this can push to 60 points at least, or how far it will go before the exit signal. So this is what I was saying. For this multiple crosses, you want to use lot sizes that can make you survive like such back-to-back losses. So for example, this one for me, I've already hit TP on my 60-point account, but I do have an account that it's taking the trade until we get the exit signal. So for example, this one, on one account, and it's still trailing my stop loss because we're still pushing up. Initially, I was down $2,200. I'm up 1,800, so I think I'll be just down about $400, depending on when my trailing stop gets hit. But for example, right now, this is in profit. and I'm out of that trade. So from a loss of $2,200, I'm now down $400 only. And for the account that's waiting for an exit signal, I'm still pushing or I'm still in this trade. So if this trade decides to go for 100 points or 200 points before reversing, then I'll lock in that amount of profit. But I do recommend like trailing your stop loss at like 60 points because sometimes, yes, you'll get that big move. But for example, right now, on that account that's waiting for an exit signal, I can easily or price can easily push down and exit me out only at like 10 points in profit. So but for me I chose to like have two accounts so that one account just rides the wave, excuse me, until I get an exit signal, and the other account just starts trailing my stop loss at 60 points. So for example, the account that I'm waiting for the exit candle, I was down about 4,000 from those back-to-back losses, but right now I'm up 4,000, right? But here's the beauty of this entries, right? Not every day will you get a ranging market. So in most days, like for example, when I showed you guys the trading journal, in most days you won't get that ranging market that can have you, having a bunch of fake outs here and there. So, those are just outliers, but the key is to have or to use a lot size that's just enough that you survive any fake out, and then you wait for that, one big move. So for example, I'm still riding this trade. So my open profit right now is about 4,300 or so, and that's on a 200K account. But again, right, I had a loss of about 4K on those three back-to-back losses. So best case scenario here may be a little bit at break even or something. And we can map out both of those trades. So for example, this trade for me is still running here. And it's running 487. So we are almost at like 100 points of a move here. Yeah, because 100 points will be something here. So until I get that exit candle, which is the red triangle, like I'm still in this move. And also our intraday market open entry is still pushing. So this is what I had said earlier. So I was still bullish on US30, but buyers had to come down and pick up liquidity from somewhere. So you can see we did have this. I forget let's see what order block this is. It's like a 15-minute bullish order block where price was bouncing off of, and it was also around the entry or market open entry. So you can imagine like on a day where we don't have this back-to-back losses, and this is the first time I think I've had a bunch of heavy back-to-back losses in the last 2 weeks. But you can imagine if it was on a day that I didn't have like this heavy back-to-back losses, that's like 4K floating profit there on like a 200K account. Now this is the only, right? So this is if you're waiting for, and this there goes the exit signal. So this might be the exit candle here. If price closes, if this candle closes bearish, then I'll be out of that trade. But doesn't look like it's gonna close bearish. So whatever candle is gonna give me the red triangle, that's going to be my exit signal of this account. But other than that, even though this decides to push up for 200 points, for 300 points, like I'll still ride that whole wave all the way to the top. And there it pushes, right? So I've already hit like 100 points. So I'm up like 5,000, 5,200 from a loss of about 4,400. So best case scenario here, I end up right pushing and getting a nice win. So this is still pushing for me until I get that exit candle. All right, so there goes that red triangle. So this might be my exit candle here. All right, yeah, so this will be my exit candle. So I'm out of that trade at, so it looks like I'm back to break even for the day on that one account. I'm just down 200 bucks from on that account. So down 200 bucks from being down 4K. So right now, I think we have a proper direction in the market because you can see this buying pressure is continuing. And here we did have a previously, before I moved this blue line up here, the initial bearish structure was somewhere around here, somewhere around here. So that's what was holding price up, and also this candle right here. So this hourly candle, the top of this week, so you can see we closed above it, and then sellers tried to drive price back down below it, but then we are now back above it. So the next goal, I think, for US30 is probably the high of this week right here or this week right here. But either way, hopefully we should be able to get to TP for this trade. And as price is retracing back down, then you know what? We might get another buy entry, because if price is going to retrace back down, it might retrace back down and then pull back and then give a buy entry. So we'll see if we get a buy entry. And now if we get a buy entry and then push up another 60 points or 100 points, or even 80 points, that would push me up back into profitability. So you can see the difference, right? So you have a small enough lot size to survive this, or to survive days where market has a bunch of fake outs, and then you get to ride a nice push up for 60, 80 points or even 100 points. We haven't had any SAR or EMA entries for today. All right, so I'll wait for possibly one more entry here. And yeah, so here's another buy. So let's see if this buy closes. But I'm still bullish on US30. So if we get a buy, the better. And that should push us up. So let's see if we get a buy entry here. And hopefully we get a buy entry with some good volume. All right, so let's see how this buy will go. Let's see this buy. All right, so we are in and out because we had so this buy was quick, so just a small, about break even. Just a small loss of like a 1 point right there. And you see this exit candle save a lot of drawdown. So they normally save you a bunch of drawdown. So just like a small drawdown there. But if we push back up and get a nice buy signal that pushes up, that would be pretty neat. All right, let's see. I think we've started consolidating. Yeah, so we've started an area of consolidation. So that's why this buy that's right here did not fire down all the way down here. So we are in an area of consolidation. So we just have to wait for price to break away from it. And then possibly we can get a buy or even a sell that's away from the area of consolidation. Mm. And then sometimes you'll get days like this where you get a signal that's in an area of consolidation. So right now the focus is this bottom right chart. So you can see here, you have this buy here that's running, but it doesn't show up here, right? So that's the double-edged sword. So sometimes you will get a push that happens in an area of consolidation and it pushes up like 150 points, 40 points or whatnot, but you just have to stick to that plan of only taking signals that show up in an area that's outside of consolidation. And then that's another reason why you also diversify your account so that you can have an account that's, for example, riding this intraday market open direction, and then another account that's maybe riding the market open scalp, the impulse market open scalp, the crosses scalp, and then the multiple crosses scalp. All right. So we are having a possible buy here, and I think this buy will be pretty nice to go and break this highs. So let's see if we can get this buy, and this will probably be the last trade I'll take on the live session. So there goes that buy. Um, let's see if we can push up here. It would be good if we get another 100-point ride up. I think it's just a matter of time before breaking this high and pushing all the way up to TP for this trade. So it lines up also with the intraday market direction expectation, but we just need a nice impulse here. So we don't want to start seeing any back and forth. All right, so there goes that exit signal. Let's see. Yeah, so there's an exit signal there. So this is just like a small 5-point stop loss there. Let's see if we can get a push up. Mm. All right. Looks like we're in a consolidation zone, so this is not going to print. This buy won't print. All right, so it's about what? About 12 minutes till 11. So that should be it for today's live session. So we've started consolidating back and forth in these areas. So that will be it for today. This one is still running. For the scalps, the market open scalp unfortunately ended up being a loser. So -1R. Same thing as the first crosses scalp here, ended up being a loser. So -2R. We did not have any 9:30 a.m. impulse entry. And what else? For this multiple scalps, personally, at about, let me see, about 0.5 -0.5% for the day, because we had like a small, a few small or a few losses or smallish losses, and then one big win. So I'm about like 0.5 or -0.5. down for the day. Yeah, about minus 0.5. So we'll see how this ends up going. But other than that, that should be it for the day. The intraday market open entry is still pushing. So hopefully this one can keep going and going. But other than that, I will see you guys tomorrow. Have a good rest of your day.